Thank God it's Friday. Let's do Friday business. It will be 55 minutes, and here's what we have prepared for you. A lot of reactions still following the 70,000 naira minimum wage in Nigeria. We'll see what economists have to say. And in Kenya, more jobs added, 1,826 jobs. That's an aggressive expansion. And not so good for Zimbabwe as they missed their mineral revenue targets. Good afternoon, thank God it's Friday. I'm Ini John Mekwa. This is Business Incorporated. We start from the global space as usual. Oil prices fell on Friday, setting up for a second weekly decline as mixed economic signals weighed on investor sentiment and boosted the dollar. Brent crude prices fell 51 cents, that's about 0.6%, to $84.50 a barrel. U.S. West Texas Intermediate crude went down also, lost 72 cents, that's almost 1%, to $82.10 a barrel. The U.S. dollar index climbed for the second consecutive session after stronger than expected data on the U.S. labor market and manufacturing earlier in the week set a stronger greenback that dampened demand for oil-denominated oil from investors holding other currencies. Still in the global space, gold prices went down also, but we're on track for a fourth straight weekly gain as expectations that the Federal Reserve will cut interest rates in September lifted bullion's appeal. Spot gold was down 1.25% to $2,414.45 per ounce. It has risen 0.1% this week and hit an all-time high of $2,483.60. That happened on Wednesday. U.S. gold futures fell 1.6% to $2,416.80. The U.S. dollar inched higher on 0.1%. Benchmark 10-year Treasury yields also drifted higher, putting pressure on bullion. We'll come to our own central bank here in Nigeria. Central Bank of Nigeria is forecasting a potential slight decrease in the country's external reserve for 2024, and that's because of debt servicing and other commitments. According to the inaugural Central Bank of Nigeria 2024 macroeconomic outlook titled Price Discovery for Economic Stabilization, the external reserves, which amounted to $33.09 billion in 2023, may experience a marginal decline this year. This projection considers ongoing payments for outstanding foreign exchange obligations, matured foreign exchange swaps, and debt servicing. However, the outlook anticipates that improvements in crude oil earnings alongside recent reforms in the foreign exchange and energy sectors will help mitigate the decline in external reserves. As of July 8th, Nigeria's foreign reserves surpassed $35.05 billion, marking the first time in approximately 1 year, and has remained above this threshold since then. And yes, the minimum wage of 70,000 naira, it's official. Well, not official yet. We're still waiting the president to send it to the lawmakers and then the assent of the president. But there's been reaction since that there's been agreement between the parties involved, the private sector, the state government, and the federal government of 70,000 naira. Economists are looking at the consequences this may have on the economy.
If you look at it in dollar terms, it's actually falling. So what does that tell us? Two things are majorly the problem: inflation and exchange rates. Both of them are not mutually exclusive. There is a direct relationship between the two of them, especially over the long run. If you have high inflation environment, you are going to have a depreciating currency. So going forward, it will be very important for us to be able to rein in inflation and also to some extent be able to do something about exchange rate. There are different arguments that we need a depreciating currency so that we can export more. That's very important in economics, but also from our understanding in the country, we also know that depreciation of the currency also harms labor. As you said, there was a time when our minimum wage was close to about we are in $25, we moved to $53, we moved to $116. In 2018, we moved to $98. Before this, we already moved to about $20. Now we are back to $44. So what is important is that depreciation of the currency is harming labor or harming the purchasing power of people in the country, and something has to be done on that. I mean, government should do something about the currency that is actually depreciating. But it's better than nothing, right? So if you are saying we are in 44, it is falling, but we are actually in 20 about yesterday until they agree. So from 20 to $44, that will say something for now. But going forward, as I said, we need to start talking about what are the things that are increasing the cost of living to an average Nigerian. If it is energy, if it is power, if it is transportation, if it is cost of food, what can we do about them such that labor doesn't have to spend a lot of money on this, then they have money to spend on other things in life that can improve the welfare of the citizens. Purchasing power of people will fall when prices are rising.
So, well, I think it's obvious that in the coming days, there'll be more conversations around the expected impacts. We know before now, we've been talking about some potential possible impact of that increase in minimum wage, the thing about inflation, what it can do to that number. I know that, I mean, we're at the middle of this month, so most likely we got a bit of it, but more from August. That's the impact of this increase in the minimum wage at 70,000 naira. And these are the things that feed into the not so good indices, macroeconomic indices in the country. And that's why we see an increase in exit of talent from the country. The latest is coming from the Health Association. The Medical Association are saying that about 100 psychiatrists, doctors have left the country to practice abroad. We know that's not limited there. We've seen it happen in the banks. We feel it when we want to use the bank apps. They say a lot of the talent managing that have also gone to look for greener pastures abroad. And we did see the retaining of talent that came from Hanley and Partners, when Nigeria was the least among about 8 countries on the continent at 14%. So it seems like it's something should be done about it. We have to discuss that with us. Dr. Adekunle Badmus is the Chief Executive Officer of Goodmost Learning Center. Dr. Badmus, good afternoon and thank you for your time.
Excellent afternoon to you, my sister.
Great. So are we grasping, are we reducing this exit of our talent? I know it's about 2 years ago, it was really bad. I think it was also last year. Is it normalizing now?
Thank you. Basically, it's not normalizing. Everyone is still looking out for greener pasture over there. And the reason for this is that the environment in which we find ourselves. You see, when you compare the minimum wages that we get here to the minimum wages they get over there, and people see that when people go out over there, they're able to have some certain ability to mob up some funds, for a startup. People now see that, okay, apart from the working system, is the fact that they could earn something meaningful. They could earn something meaningful. And if you look at most companies, most entrepreneurs, you see that most of the people that purchase from them, the real estate company, they are all from the diaspora. Their largest number of people come from the diaspora because of the exchange rate. You understand? They are able to, if you're getting $2,000 a month, for instance, that means you're getting about 3 million naira.
Yeah, but you're not spending naira there. But I also want us to talk about this issue of, is it really greener on the other side, or is it perceived to be greener on the other side? Because the level of taxes paid by individuals in the United States, the UK especially, some stories from migrants at this time, they're not really finding it easy. Yeah. So I mean, is it really easier on the other side, or is it just the perception?
It's just the perception. It's not actually greener, because I represent Nigeria in Nigeria and Nigerian diaspora because I live abroad too. So, and I know that you have to do the right thing. You have to pay your tax in time. You have to pay your bills on time. despite the fact that you have all of these things in place, all the time, your lights doesn't not blink, everything does, but if you default in payment, it will be interrupted. So people walk abroad and they do the right thing. I believe what we're faced with is kind of a mindset issue here. You understand? Because when you say they get the money there, they actually put the right work in. So it's actually the mindset. So I see that the developed country did not just develop, they develop as a result of developed mindset. It's actually people sitting down looking at things that they could do to make their country what it is, and that is what they have made out of their country. So we need to sit back. We need to start what I call a mind surgery global in Nigeria. You understand? In our country, we need to start thinking about, we need to start teaching something like creative thinking, paying attention to details, developing great memory, flexibility, and speed. And
who's going to do all of this?
We, just like our former national anthem says, "Arise, O compatriots."
Now,
yes. Nigeria is calling. It's a nation call for every individual. That is, whether you come from any tribe, we all need to stand up on this. It's
perhaps
not about
the National Orientation Agency could take that, because you actually do need someone to drive it if there's something that has to be done.
Basically, for me, being a United Nations diplomat on government bilateral agreement, I let people understand some certain things. That there is a deep gully, in this government bilateral agreement thing. Anytime you see an embassy in our country, it connotes, as at the time the embassy was established, the number one man in our country and the number one man in the other country agreed on behalf of who? You and I. But the sad news is that you and I know little or nothing as to how to harness the opportunity therein. You understand? Now, the government bilateral agreement industry alone is rated over $500 trillion industry that every woman being can tap into education, into oil and gas, into different sectors, journalism, media, and all of that. There could be some sort of exchange. You understand? Some Nigerians did not know that there are opportunity for them, sequel to the fact that the government has already signed this government bilateral agreement. Though we have agencies that is supposed to create the awareness, do all of these things, but so far so good.
You're saying this as an alternative to people leaving the country. They can actually stay in the country and get some of these benefits.
Of course. Let me tell you this. For instance, people can actually stay in this country and get this education they want to get abroad by doing it online. People can actually stay in this country and look inward. Another oil block for us is export. People can actually do some sort of export. We have some local things that some people need abroad. They need for manufacturing, they need for a lot of things.
But you have to be able to meet up with the requirement before your product can be allowed to exist.
That is what we call accurate knowledge. In anything you want to do, you need basically three things. You need accurate knowledge, you need accurate information, you need accurate connection to be able to do them. Now, if most likely people are ignorant because they don't know what's available to them. You understand? So there are some certain information that is available to the people that people can actually harness the opportunity that they know little or nothing as to how to do that. So, and that is why information needs to be coming out. Like recently, there was a launch of the global clusters where people, technocrats, professionals, and entrepreneurs meet. 5 days after, the federal government announced through the VP that they are coming up with youth enterprise clusters. You understand? And they are ready to spend 110 billion naira into that. Youth enterprise clusters connote youth. You understand? So anytime the government is saying something, people need to move. Because if you did not move, you wouldn't be able to harness the opportunity.
But don't you think that perhaps people don't even pay attention anymore because of the loss of trust? We've heard a lot of beautiful programs and policies, and yet if you speak to people, for instance, the distribution of food, sometimes even as a journalist, you try to get where are the people who are getting this food, and sometimes it's so difficult to get. So over time, people have lost trust in the government. So even when you hear beautiful announcements and policies and initiatives, people don't make the move, or when they make the move, they get frustrated, and so they get back into their shell.
Remember, this is our country. This country does not belong to just one person. It belongs to all of us. We are all stakeholders. and we all need to take responsibility. The growth and any good thing that will happen to this country, it is all of us that needs to stand on our feet and said, I want to make this happen. And we all have our own little contribution that to add to what is currently happening into this country. Let me tell you, the case of Nigeria is like an idiomatic expression, going into a market of 100, where you must sell the 100, or you must sell in 100, but you have about one that is bad. You understand? But you cannot sell until you have 100. Now, if you go into that market, you can only sell 100. What will you do? Everybody has to think. You have to separate. First of all, if you leave that one bad one, it will spoil the rest. So you have to separate first. When you separate, then you can now do something. And that is what I have done as a person. I live in the Republic of Turkey, and I've been looking into how we can actually harness most of this opportunity. And I've been advocating for individual like you, individual like me, and my other friends that said, see, we can't leave this to the government alone. We all need to look at, okay, the information I have, I'm sharing it. I'm telling you that, do you know that as a teacher, you can actually stay in the comfort of your home and teach someone in India and get fund in. You can only actually take some UK diploma course, because the minimum certificate you need to actually get a job abroad is diploma. And this is not an era of certificate anymore. We're in the new normal, where what is happening now is about certificates. Do you understand? It's not about what can you do and what skill do you have, what knowledge you have, and you display it and people hire you. And COVID came and opened our eyes to the fact that people could work remotely and people could be interviewed from the comfort of their home and all of that. So what am I trying to say? What I'm trying to say in a nutshell is that people need to understand that we can't leave this to the government alone. The countries that are working, everyone stand up and do something. You understand? There are industry, there are technocrats, there are entrepreneurs and professionals that actually stood up to make the country work. And they actually contribute their own culture from the business they do, and they set out something to actually, do their CSR and all of that. So that is why we need to come up with initiatives like rewarding those that are building the nation, teachers. Do you get what I'm trying to say? Doing them well. Teachers has made you, has made me, made the governor, made the president, made everybody. There is something they need to look at. You understand? These are the people that are building the nation. Parenting, coming up with things that can actually, in every community, where everyone will look at everyone same. And, in every society, you have the high end, you have a bit below middle class, the middle class, the low end, and the no class. So people should be able to adopt each other and, mentor each other. There should be some sort of mentorship. You understand?
All right, so Dr. Barnes, I think what I hear you say is, let's look inwards.
Yes.
Let's not be quick to just leave the country.
Yes.
And because,
And actually, this country is the best place for you to actually grow faster, because it's still developing. You understand? You have a lot of things you can actually look into, and, into agriculture. We don't have enough food. Up to now, we still import sausage. You understand? So we have a lot of things to do, and we all need to look inward, and every industry. And I want to advise the federal government, please support every company that is doing well. If a particular company is doing well and has hired maybe over 500 staff or 200 staff, if that company has a boost from the government, they are going to hire more.
I guess that's where the the relief for small businesses, part of the tax reform.
I believe people are getting it. If they are getting it, good. But if they are not getting it, everyone should just know that we all need to just keep doing something positive to this country. Something positive is like a black water in a club, in a cup, and you keep pouring the white one into it, it will soon turn to the white. So everyone should just keep being positive about the country and keep adding positive vibes into the country. All
right, thank you so much for that message of hope. Dr. Adekunle Badmus, yes, Chief Executive Officer of Good Muscle Learning Center. Yes. We do hope your message goes well. Thank you for your time.
Thank you very much.
Let's take a break. When we come back from that break, we head to the markets and then other parts of the program. This is Business Incorporated on Channels Television. Welcome back to watching Business Incorporated here on Channels Television. We'll head to the markets now. In the absence of Will Ibong, well, I head to the market to give you the intraday market numbers, and I'm sure you can see it right there. It's not looking so good. Perhaps we should have begged Will, to handle this. But it's in the red this afternoon, even though we have regained 100,000, which I've been looking forward to for a bit. But for intraday, 0.04% down for the NGX. South Africa is better than that, or worse than that, I beg your pardon, 0.60% at 79,850. Let's see if we can have Matilda now to tell us what's going on in the market at this time. Perhaps we would know which of the counters is driving this red sentiment that we see. Hi, Matilda. Good afternoon.
Hi, good afternoon. Thank you for having me.
Great. What's going on in the market? I was happy that we had regained that 100,000 level, but seeing that we're losing or we're going down at intraday also brings some kind of uncertainty. What's going on?
Well, that's interesting because we started the week, quite positively. On Monday, the market gained 0.30%. On Tuesday, I think it's about 0.1%. Went down a bit on Wednesday, and that's because of news about expectations of MTN likely lower than expected H1 numbers for MTN. Thursday was also positive, but I would say that this is mainly attributed. This negative sentiment and even result of performance that we're seeing today is going to be largely linked to the 50% windfall tax that has been proposed to be imposed on Nigerian banks. So we're seeing a lot of profit-taking activities, some sell-offs even on most banks. Investors are mostly cautious. They're also mostly worried about what the future of even the recapitalization exercises, especially, if you look back, banks had revaluation gains, they recorded massive revaluation gains, which fed into their bottom line, right? And, this made investors really excited, led to the bullish performance that we saw last year, even into January. And then the CBN came again saying that, banks cannot pay out dividends from it. A lot of uncertainties and, questions were asked. Now, with this 50% windfall tax that has been imposed on, or that is to be imposed on Nigerian banks, there are questions about, what is going on? Is there going to be another news that would pop up out of, anywhere?
Matilda, honestly, I have to say this is really, really quick because it just went through second reading. It's not gone round the lawmakers, and for us to say it's really a law yet. And I think they did suggest that it to be a one-off 50%, and it's supposed to be on the foreign exchange gains of the bank. So one would have thought that investors are safe. This quick reaction is rather, I didn't see it coming this soon.
Right. That the market mostly runs on sentiments, which plays a major role on fundamentals and even technical analysis. So, I believe that fundamentally most banks are sound, but then there's still the sentiment part. What news is driving the market? What is coming on? Who is buying? Who is selling? What is the government saying? What circular is being passed on or released at this point in time? So I believe that also plays a major factor. But I believe that at the end of the day, banks, like I always say, banks are always fine. They are very resilient. They are so
liquid, like they can go through anything and come out of it. Well, what else is happening apart from this interest in the banks? What else is happening with the stocks?
Well, right. So I believe that investors are also looking out for next week. The MPC are supposed to have their meeting next week. So there's also this cautious trading activity on the NGX. The investing community analysts also, they widely believe or expect that the MPC will likely hike rates by 100%. So we are looking out. I believe that investors are just mostly cautious today, in expectation of what the MPC is going to do next week.
So last week wasn't a very good one for the NGX. We closed negative for the week. It was 4 days of negative, but only one positive. What do you see by the close of trade today?
Well, depending on the direction of the markets today, I mean, we've had 3 positive closes this week. That's on Monday, Tuesday, and yesterday, and just 1 negative close. I believe that if today, I mean, the market currently is doing negative, I mean, minus 0.04, 0.06. If it's not as, if the the tilt to the negative side is not so good, I believe that the market should either close up marginally this week, or even if there's going to be a decline, it's going to also be marginal, because we've had 3 closing days, and Monday was quite significant. Yesterday's own was also quite significant. So unless we see a very bearish tilt, I believe that the market should still close positive this week.
All right, Matilda, thank you so much. I'll stick and adopt your optimism for the week. Thank you, and do enjoy the rest of your day.
Thank you.
All right, now let's look at other numbers. I think we head to Egypt now, the other parts of Africa. It's a positive close. They're closed today, but from Thursday's markets, they were up 1.11%. Kenya also for Thursday, 1.10%, but in the red. Let's go to other continents now, and it's the Middle East. The Middle East is intraday. Abu Dhabi, 0.07% in the positive at 9,232.51. Dubai also positive 0.25%. Right there, we go to other parts. The markets are closed on Friday. They don't trade on Friday. Saudi Arabia and Qatar on opposite side, 0.25%. And deeply in the red, Qatar closed in 1.16%. We see other parts of the world now. The United States at 40,855 for the Dow Jones. Features are in red this morning for them. S&P also in the red. NASDAQ in the red. It's a red features for the United States at this time. Let's see what Maria has to tell us about Thursday's trade, how that closed by yesterday in the United States.
The U.S. stock market had a tough day on Thursday as the Dow Jones was down by more than 1%. It was down at 1.29%, and the S&P 500 was down at 0.78%. While the heavy tech NASDAQ still continued to show a slowing of the day at 0.7% down. This is mostly attributed to the major sell-offs in the tech industry. This is causing many concerns for U.S. investors. The geopolitical and political landscape in the U.S. is causing much controversy for the stock market. The unsettling of the politics is causing much impact on the U.S. economy.
Yeah, thank you so much, Maria, for that. So finally, we go to Asia before we leave the market. The Nikkei is in the red at the close of trade, and Kospi is also in the red. Whatever happens in the United States spills to especially the Asian and all of the Hang Seng Index deeply in the red, more than 2% at 17,417. Yesterday, myself and Will, they talk about what's happening to demand. We saw the GDP of China drop even more than was expected, and so that the sentiment is spilling. China is the second largest consumer globally, especially for oil. Shanghai is in green, 0.17%. That was just an escape for them. In Australia, it's however red, just like the other market, most other markets, 0.81% at 7,971.60. Now, let's leave there and go to EU, where Germany is considering a number of measures to attract labor, and that includes handing out big tax rebates for skilled foreign workers. And a lot of Nigerians may be interested in this, but the plan is being criticized for being unfair to domestic workers. Let's get more details on this with Emily Leshner. Hi, Emily. Good afternoon. What are these measures?
Hi, thanks for having me. Well, one is a tax rebate for foreign professionals during their first 3 years in Germany. So it would be 30% in the first year, 20% in the second, and 10% in the third. And those would be given to people who come here as qualified specialists in certain sectors. They're also considering incentives for people who work past retirement age, as well as some measures to reduce some of the red tape that foreign workers have to deal with, something I'm all too familiar with. In 2020, the government introduced a Skilled Immigration Act, which has been reformed many times since. And the aim of this was to remove a lot of the red tape that discourages foreign workers from coming to Germany. But the influx of skilled labor that Germany had hoped for just hasn't been there. There has been an increase in 2022. Around 70,000 skilled workers from non-EU countries came to Germany. That's about 5,000 to 6,000 more than before the Skilled Immigration Act was introduced, but it's still not anywhere near enough. And so that's why these additional measures are being put on the table. But there has been a lot of criticism. Some politicians say that the measures amount to treating people differently under the law and that it's not constitutional, that essentially it discriminates against domestic workers, many of whom are already struggling economically. Though there are some limits, there's a minimum annual income that needs to be achieved, as well as a maximum threshold as well, so that multimillionaires aren't encouraged to come to Germany just to take advantage of the tax breaks.
Yeah, but I'm just wondering why Germany is thinking about this now. Is the labor problem that bad?
Well, a recent study done by the German Economic Institute reports that there's currently a shortage of nearly 600,000 skilled workers in Germany. And there are certain sectors that are hurting much more than others. Germany needs doctors, social workers, teachers, salespeople. The logistics and transportation industry needs a lot of workers, too. In Berlin, that's very apparent. There are often train delays because there aren't enough staff. You see more and more advertisements, advertising jobs for train operators, police officers, truck drivers. And a labor shortage this large is a big risk for German businesses. Economists have calculated that economic growth this year would be more than 1% higher if there were enough workers. And that's a lot, considering that the economic forecast for 2024 predict a growth rate of just 0.2%.
Yeah, Emily, I have to tell you, Nigerians are great travelers and they're looking for every opportunity to get out of the country. I wonder if this is one of those. But let's look at the investors, what they're doing at intraday.
Well, retail sales figures are due today in the UK, but analysts expect them to be fairly subdued. They're also expecting producer prices to come out of Germany as well. It's been a rough week for investors. There's been a lot of uncertainty over the U.S. presidential race, from Trump's comments that Taiwan should pay the U.S. for its defense, for the assassination attempt on his life, as well as Biden's threat to tighten restrictions on Chinese chip manufacturing. And the Federal Reserve is likely to roll out another rate cut in September, so investors are keeping an eye on that. But meanwhile, the Bank of England is holding steady for now. It's not likely that it will introduce another interest rate cut.
All right, Emily, thank you so much and have a great weekend. Now let's come back to Africa and see what's going on. We're beginning with Kenya, where in a positive development, the Kenyan banking industry saw a significant expansion in 2023. According to the latest banking supervision reports from the Central Bank of Kenya, the industry added 1,826 new jobs last year, bringing the total number of staff to 37,933. This represents a 5.1% increase from 2022. The growth is attributed to the opening of 41 new branches across the country, with Nairobi County leading the way. While the number of new hires is impressive, it's worthy to note that it's 49.8% lower than the previous year. And still in the financial services sector now, bank loan accounts have dropped for the first time in 5 years. According to the latest data from the Central Bank of Kenya, the number of loan accounts declined by 1.52 million in the year ended December 2023. And this brings the number of accounts to 12.92 million. This marks a significant shift in borrowing trends as individuals and households increasingly shy away from taking on new loans amid rising interest rates. The drop in loan accounts is attributed to the soaring interest rate, which saw the central bank raise the benchmark lending rate 3 times last year. Personal and household loan accounts account for 94% of the sector's loan accounts, were the hardest hit with a decline of 1.56 million accounts. This trend suggests that borrowers are becoming increasingly cautious about taking on expensive loans, and banks are also becoming more selective in lending. And this, of course, follows a lot of those stories, the protest and the finance bill, which also is making the rounds in that country. And then we head to Zimbabwe, where the country is bracing for a challenging economic landscape this year, 2024, because economists caution about dwindling foreign exchange reserve as reduced government revenue and sluggish economic activity amidst a global downturn in metal prices. During the first half of 2024, the Minerals Marketing Corporation of Zimbabwe disclosed that the country sold 1.9 million metric tons of minerals, and that's excluding gold and silver. That amounts to $1.5 billion in value. This figure falls short of the target set at 2 million metric tons, valued at $2.03 billion, marks a 6% volume deficit and 26% revenue shortfall. The decline is primarily attributed to the depressed global prices of metals. Experts suggest that moving towards mineral beneficiation, processing minerals within the country could mitigate these risks and improve economic stability. The current heavy dependence on primary products makes Zimbabwe vulnerable to price and demand fluctuations. Now let's talk about something that is transformative, and that's cloud migration. Well, if you're a company dealing with a whole lot of data, even a broadcasting house, where you deal with a large amount of videos, you might need the cloud as your storage. It's safe, but expensive. Well, let's talk about this and see if you would buy the idea and perhaps also adopt it in your company, or in some cases, the public sector. Now, the government is very serious about the safety of data, national data. Let's discuss this with Kenneth. Kenneth Osim is the Chief Executive Officer of Phonex Systems. Good afternoon, Kenneth, and thank you so much for joining us.
Thank you very much for having me today.
Yeah, so everything is digitalized. We need more space. And since we don't have that space in the physical world, we tend to go to the cloud. Let's look at the Nigerian scenario. How popular has this become at this stage of our development?
Right. So in Nigeria right now, we see a lot of public sector organizations currently embracing cloud technologies for process improvements. We already see this in the private sector as well, but predominantly in the public sector, we are seeing improvements. However, a lot of public sector organizations still kind of like, just like you said, I'm afraid, or if I may use that word, to move fully to the cloud, maybe because of the expertise of their staff. It could be on the cost aspect, it could be on compliance. So there are a lot of work that needs to be done in the public sector to make them fully embrace cloud migration.
Do we have any of these countries running or controlling, these applications or clouds or platforms? Do you have them in Nigeria or as Nigerians? And I'm asking that because, what if there's a problem or there's a failure of renewal? What happens?
Right. So right now, we do not have any cloud provider having data centers in Nigeria. However, a lot of cloud vendors have edge computing located at very strategic areas of the globe where it helps to bring data very close to the users. In Nigeria right now, we have several companies that are MSPs to cloud service providers, and they kind of like help businesses, organizations to migrate to the cloud. They also have services like managed cloud services, where instead of you trying to do your day-to-day business and also manage your cloud infrastructure, they handle everything that has to do with managing your cloud infrastructure, and you can focus on your business strictly. And that is basically what my company does as well. We kind of like focus on doing DevOps services, public and private sectors. We do consulting, managed services consulting as well, and do specific niche application development services as well.
So we know that the government, the public sector is at the core of this at this time, but how much of the private sector can afford, this cloud migration?
All right, that's a very interesting question, because I've had this. I've had to explain this severally at several meetings that I attend. So basically, when you have an on-premises presence, let's use a public sector like maybe ABC, for example, and they have on-premises presence. And this means that they have their own data center, they have their own staff, they have their own security, their own cooling system, and they connect to any ISP they want to use for internet services. Now, this is what happens. They have to do the patching, they have to work on the operational maintenance and all of that. However, when they move to cloud, they're basically trading capital expenditure for operational expenditure, because they basically will be paying for what they use. Let's say, for example, a public sector organization wants to deploy an application, and they require a server, and they go ahead to buy a 2 terabyte server. However, the application itself requires maybe a 2 gig data. However, now they are spending more money on over-provisioning instead of basically just paying for what they use. And this is what the cloud has to offer. Now, when you use a company that knows how to use well-architected frameworks to design a cloud platform for you, they will now help you to reduce cost and improve operational efficiency, basically. Yeah.
Okay, so help us understand how this works. If the government, for instance, since we see our government here in Nigeria talking serious about data, safety of data and all of, and we know that, data is the new oil for the world now. And then they decide to adopt, the cloud for platform, to keep the data. What are some of the things that should be looked out for? What are some of the things that should be considered? Should they consider cost? Should they consider the issue of infrastructure? Should they consider the issue of, security of this data, which we are all trying to protect?
Right. So when moving to the cloud, everything you've mentioned is a concern that any organization moving to the cloud should consider, right? So for example, if you're moving to the cloud, you should first of all consider the cloud platform that you will be going with. Let's say, are you going with Microsoft Azure? Are you going with AWS? Are you going with the Google GCP? And then once you do this, you first of all also need to understand the benefits of cloud, and then also look at prioritizing compliance and security for your organization. So then this is where you start doing things like IT governance and compliance within your organization to know where you actually want to save your data on. And then you also have to look at disaster recovery in an event where there is any outage or failure. Ultimately, if you're looking at the security, cloud is very secure because it has very robust security technologies that you can use to protect your data. And then on the cost side, when you use an MSP that is experienced and understands how to do managed services in the cloud, they can also help you reduce costs. And the big picture is you're basically trading operational expenditure, and instead of going with over-provisioning infrastructure, you just be paying for what you use. Yeah.
So just briefly now, Kenneth, for television station like channels, we deal with a lot of videos, and sometimes you want to keep videos of old stories, and you think you need, I presume the cloud could also be a good place, but I'm afraid of the costs.
Right. So, for example, let's say for Microsoft Azure, there's something called reserved instances or savings plan, right? So let's say, for example, you have so much data, you have videos and on all that you have stored in storage account on Azure, for example, and you then you don't want to pay for that, you don't want to spend too much on that. So you can leverage things like reserved instances or savings plan. This is where the cloud vendor looks at your data and gives you an easier cost on your own side. And this helps you save a lot of money. And then it also has this robust capability of cost management where you can see exactly what you're spending, when you're spending the resource that is spending that money, and it helps you track and also use this information to share with your stakeholders for better understanding of where it needs to be streamlined or where you need to do the needful. Yeah.
Well, thank you so much, Kenneth. I must say that's very important to us right here, because we have a lot of videos and you want to keep them. The CDs get bad, the SD cards get broken, even the hard drives, But thank you so much for that, and thank you for sharing that tip with us.
Thank you very much. Yeah.
All right, it's a bit into the crypto time, but I mean, that was good information that even Ladi needs. Ladi, I know you needed that information. I asked that for you because you have a lot of visuals,
right?
And you need to keep them
exactly
for the future.
Exactly, and who knows? I might start keeping money in the cloud, at some point.
We have land, virtual land, and everything.
Exactly.
I think we're tired of Earth.
Yeah.
We need to have a virtual world. Yeah.
Hopefully, don't overpopulate the cloud. Then
we'll move to somewhere else.
We'll find another.
Yeah.
I wonder what that one's going to be called. But let's look at the market now. What's the color? It's red. Yeah, it's been green for a couple of days now, but the red has to come in and play to 63,000. So we're having a pullback with Bitcoin after trying to breach that 65,000 level, 1.47%. Ethereum also down. Just TON there. Yeah, we know TON is quite popular at this time, and it's in the green. Let's look at some headlines. Jamie Dimon's warning that the Bitcoin price right now, that's JP Morgan in a note, they're warning that Bitcoin's price right now is too high. Since former President Trump's assassination attempt, we've seen Bitcoin rally. So the Bitcoin price surged about 9% after that. So the bank is saying that this is somewhat artificial at this point, and we might see it come down. And we're seeing WaziriX, the Indian cryptocurrency exchange, it got hacked for about $200 million, and we're seeing that money being swapped to other coins at this time by the hacker. So definitely we know one of the risks there in the crypto market. And Hong Kong launches a stable coin sandbox at this time. They're leading, trying to get more information on stable coins and how they can actually benefit from it. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
With you here.
Yeah, TGIF, Rume. So definitely we're seeing Jamie Dimon there, a note from JP Morgan saying that Bitcoin's price right now is too high. How are you seeing this?
I'm very, very, I'm indifferent somewhat, neither happy nor sad. JP Dimon has been very, very critical with the crypto industry. He hates Bitcoin. They call it different names, at some point, rat poison and all, but it's unfortunate that he's talking about this now. Well, that's how things is. You see the light at some point and you jump on it, maybe because of the fact that the Republican presidential candidate Donald Trump is actually bringing him on board as probably going to be the Treasury Secretary to replace Janet Yellen. So maybe it's changing tune right now, but I don't think JP Morgan would like to talk about Bitcoin before now. But it's a way to call people to caution that the market is overpriced. But for a lot of people won't see it that way. I'm not trying to play the devil's advocate here, but I'm saying the truth. We might see some downside, but it's not going to waste a lot of time because the market is actually front-running the possibility of having a second leg of the bull market.
All right, so we're also seeing another major hack right now with a crypto exchange in India with ZeroX, and we see $200 million has been swapped so far. So definitely the hacks, the crypto exchanges, the centralized exchanges are still being hacked right now.
Yeah, so a lot of people don't put the security implications in place when getting involved in crypto. So I really need people to see this as a way to call them to caution. Crypto is good in terms of the utilities it brings, transparent transactions, and cheap a way of setting value in terms of funds and all. But I think people need to put security implications. This year, about $1.83 billion have been hacked, linking the hackers to the Lazarus Group of North Korea. You know, that's a state-sponsored hacking establishment right there. You know, so people need to be very, very careful. All exchange platforms across board, also here in Nigeria, or even our fintech infrastructures or players here need to put that into consideration. These guys are heavily sophisticated, and they are doing so much damage. I think the largest that happened was about $308 million from DMM, an exchange in Japan. And now the second largest is now in India, WazirX. It sent shockwave to the market, and the market dumped about 1.89% when that happened. The hackers were so terrible. They moved Shiba Inu. If you check, Shiba Inu has been dumping really terribly. Shiba Inu and some other coins like Matic, Ethereum, all of them, yeah.
Right, definitely one of the risks there in the crypto industry. But thank you so much, Rume Ofi, financial market analyst. Thank you.
Yeah.
All right, so there you have it.
Move to the cloud. No hacking in the cloud.
Are we sure there's no hacking in the cloud? Well, we'll definitely find out, at some point.
Okay, all right, Ladi, thank you so much. All right, so that's it on the program for the week. It's been fun, it's been informative, and we hope to repeat it again tomorrow. Well, normally I would say meet Ladi tomorrow, but Ladi was just here. So we'll have Will Ibong, 7 p.m. tomorrow during Capital Markets. She'll give you a summary of all the happenings in the market all through the week. I'm going out for the weekend. I'll see you on Monday. Bye-bye.